Hello traders, Gary Wagner here, just after 12 o'clock in Honolulu, 6 o'clock in New York. It is finally Friday. Happy Aloha Friday, as we say on the islands. It is August the 18th, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen with a surge in gold. Last night, trading activity taking it over $1,300 to $1,306. That's the good news. The bad news is it was not able to sustain that clip up and actually closed about $2 lower on the day to finally settle at $12.90. And that, of course, is basis the December's futures contract. Silver also trading under fractional or modest pressure, closing down about 10 cents on the day to close below $17 at $16.95. Dollar nominally lower by about 0.2%, 93.35, and equities as a whole rebounded somewhat after the triple-digit sell-off of yesterday's trading activity. Dow did close lower, down about 76 points at 21,674. 62.16 on the NASDAQ, down 5, and 24.25 down 4 in the Standard & Poor's 500. Traders, what an interesting week in the market. Actually, what an interesting last couple of months, because realize that this market bottomed at the beginning of July before moving back into rally mode. We can see this bottom here, and that came the first week of July, and that is just when gold prices had touched back to $1,200 an ounce, and that would have been the conclusion of the correction from the second time we had a failure to take out 1,300. As you know, the market rallied up substantially, and then from there made a third attempt to really take out 1,300, again failing at 1298. Market retraces a little bit, and now we're into this week's action. In trading activity last night, we had this market really fly to new highs for the year as it finally broke above 1,300, but that was to be extremely short-lived because, as you can see by the real body of this candle, we are currently trading at 1291.50, and that 1291.50 is actually off about 90 cents on the day. And traders, also in terms of trades this week, we have kept ourselves pretty busy. Actually, we have just updated our performance record that we keep on our website, which shows every single buy and sell that we have issued since we started the gold forecast, along with links to the videos that we had created on those days. Go ahead and blow this up so we can get an idea of where we're at and what we're doing. We exited a trade earlier this week. Interesting activity so far in that we are in a trade that we entered just the other day, roughly 18 hours after exiting a trade in which we took some good profit. And so traders, as far as our timeline is concerned, for the last couple of months, we have been able to produce some profits, and that was after coming off of a couple of trades that were not profitable for us that resulted in drawdowns. But as you can see here, we initially put a buy on the 17th of last month, and we rode that market all the way up until this candle here, in which we covered our position and in essence pulled a profit of $3,100 per contract. A couple days later, we went in, bought again. This was a short-lived trade because as this market came down, it did stop us out, and this would have been the 15th of this month. And just the other day, right after the Fed minutes were released, we put out a buy recommendation, and traders taking that call, we're in at roughly 1283, 1284. We are still long with the market trading at about 1290. So we do have some profits in there. We are looking to move our stops up. They are currently sitting just under these lows here. I believe that we will see a play for an extended move, a close above 13. I would look for that next week. I do believe that this is the point in time when we will see gold prices actually break and hold above $1,300 per ounce. And traders, you can really see how this rally developed over time, beginning first, second week in July, as the market was sitting at 1,200, the move straight up to 1,300 and through 1,300 last night. Now, that being said, we did have the market close, in essence, unchanged, down $2 at about $12.90. And if we draw this line straight across, this is, again, our weekly chart on a red candle. The lower end of the rectangle represents the close on Friday, whereas the top high represents the open on Monday on a red candle. This is the open. The highest record close we had was last week. And then if we take our line and draw it across, what you'll see is that we are closing above this particular price point as well as this. Although we did not close above 1300, we certainly traded above that. My recommendation is to maintain your current long position as well as your stop. We will look to move that stop up quickly on Monday or Tuesday. I do expect some fast action in the market, and I am looking for a solid break above $1,300. Traders, it's been a busy week. If you recall, we were in a trade as the week started on Monday. We took a small profit on Tuesday, I believe about $8 as we exited the trade. And then when minutes were released on Wednesday, I saw the real potential for an upside rally in the market. We sent out a trade alert. We got in roughly at $12.83. Market's closing at $12.90. So we've got about $7 on that trade. But more importantly, I think that gold has a real substantial probability that next week we will see it not only trade above 1300, but most importantly, close above 1300 for the first time this year. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for another daily update and review. Have a great weekend. Bye-bye.